What if one simple strategy could take your investment to the next level? Today, we're uncovering the secret behind an income-focused fund that's been turning heads since 2022. Curious? Let's dive into the numbers and see what it's all about. Welcome back to Simply Money. Today, we're going to be recapping what we've looked at before, an update of JEPIQ, J-E-P-Q. This is a dividend fund covered call strategy that many people have been buying into. It's a very popular, it's the younger sister, brother, whatever you want to call it, of JEPI, J-E-P-I. This fund has been performing great since its inception. And I want to look at, with the latest update of the December 2024 dividend, where you would be at. We use this scenario, and we've used it on other funds. You can check out some of the videos on SCHD, DOO, some of these other funds, and how they've done on the same type of scenario of an initial investment of $50,000. As you can see here with JEPIQ, the inception date was May of 2022. We began our analysis of September of 2022 with the scenario of $50,000 one-time investment. The stock price at that time of September 1st, 2022 was $45.64. $50,000 would have just got us a little over 1,095 stocks. That gives you your $50,000. And we went through this in much more detail in another video. Now, I want to recap a few things, and I've added a couple things for further information for those that may be interested. As always, remember this is for educational and entertainment purposes. I'm not a financial advisor. I'm not telling you to go buy or sell JEPIQ. This is just to provide you information and do your own due diligence. But what would $50,000 look like invested into JEPIQ over time with the dividend reinvestment? DRIP is very important in this process, as you're getting this high dividend yield, which has been averaging anywhere from 9 to 12%. You're reinvesting that and being able to buy more shares, and then that just builds a dividend snowball. We're going to look at some yearly updates here. If we bought this in September of 2022, at the end of December, we would have been getting these dividends of 54 cents per share, 37, 68, 54. That would have given us, off the $50,000, you can see the amount we would have been getting paid in dividends. When our first payment in September would have been $591. December, it would have been $613. And these are the stock prices on the days of the dividend distribution. Then you go ahead and you buy more shares with that investment, and that shows you your cumulative. Just in those first 4 months, you've gone from 1,095 shares up to 1,150 shares. Now, don't get discouraged here. You can see you've actually lost value because the price had dropped for those first 4 months to $43. It was down $2.60 there in 4 months. If you're looking at a 4-month window as your make or break, you're in the wrong investment plan. The stock market is not for you. Stocks are for long-term investing. It is not a 6-month, 1 year, even 2-year investment. It is for 5 years and beyond, 10, 20, 30 years. That's how you mitigate risk and you increase your ability to build a strong reward, strong investment off of that. In those first 4 months, the total dividend was $2.13 per share. And this is the amount that you had. And we're going to look at the dividend growth. There's not a lot of data on this because we only have a couple full years. We're going to look at the annual dividend payment, what it accumulated to each of those monthly distributions, because JEPIQ is a monthly dividend payer. Instead of a quarterly, you get this each month, which for a lot of people, especially those who are trying to live off of the income, this is a great facet of this where you get that monthly income. And we're also going to look at what your yield on cost is. That means this is what you're getting paid now, but on that same $50,000 investment, your return is going to be much higher. The yield, when you buy it, actually increases over time because as they're growing their dividend, you're making more on your initial investment. And yield on cost is a great way to see. That's why I like having dividend growth funds that have a lot of growth in them, the CAGR, because that shows that not only is the dividend paying consistently now, but it's growing at a strong rate. And down the road, that increases your yield on cost tremendously. Let's skip down here to the end of 2023. You can see again, these dividends were pretty consistent in the 40 cents, 30 cents, up and down a little bit here all the way to December of 2023. You can see your dividend payments are, 577, 400s, pretty much consistent there. The dividend price started going up. It had a little downturn there, but at the end of the year, it was up to $48.59. So you're up from your original investments. In just over a year, so 16 months, you've increased your value, but you've also been receiving dividend payments each month. Hopefully you're reinvesting those unless you're living off of this. But in this scenario, a $50,000 investment, we're looking what it's going to do long-term growth. Your total value, well, let's look at your cumulative. Again, you've been buying shares with the reinvestment each month, 12, 9, 11, 10 shares each month. And now your cumulative, you're up to 1,287 shares, and your value has grown to $62,715. So you have increased your value through this dividend reinvestment, and this is a great way of seeing how that grows. Now, the annual dividend, each share paid $5.13, and that's for the year, and it's divided over the 12 months. For the year, your $50,000 investment now paid you $6,000 for the year. That's a 12.46 yield on cost. That is a great return on your investment. Plus, you're seeing growth of the actual shares. Not only are you getting this return in dividend investment, you can get that growth as well. And we're going to skip down here. Now we're looking at 2024, this past year, and how is it done? You can see here again, looking from January, 39 cents on the dividend, all the way up to, we had a 55-cent dividend in October. November was 49, and then this latest one was 51 cents in December. You're seeing payments now, you're seeing 400, 500, we finally hit 600 here. Look at this, we have $766, $761, $716, and your stock price, the share price has gone up to $56.97. You've increased $11.33 in 2 years and 4 months in the share price. You're buying more shares each time that you get that dividend distribution. Now your cumulative, you started at just under 1,100 shares. Now you're up over a little over 1,400 shares, and your value has grown to $81,000. That's a great investment, and it's building that ability to increase your income. So when you get ready to want to live off of that and draw from that and have that as a source of income, this is a great way to get income growing. The annual dividend now has gone from $5.13 to $5.38. The dividend growth from 2023 to 2024 was just under 5% at 4.84. And look at that, your annual dividend payment went from $6,200 to this year, you got $7,200. That's like $1,000 raise by doing nothing. This is truly passive income and passive income growth as your dividends are snowballing. That yield on cost has gone from 12.5% up to 14.5%. This is how that snowball effect begins. And just imagine this over 10 years. And we're going to continue to do this every couple months. We'll do updates and show how it's increasing and watch it. And we'll even deal with it when it has downturns. There's going to be down markets, and we'll see how the volatility of the market impacts us. But again, long term, and how your funds behave during bull markets and bear markets. But long term, you will be up. And here you're looking at a $31,000 increase, and you're generating $7,000 of income per year if you decide not to reinvest those. At some point, you turn that drip off, and now you have income coming in on a regular basis. You're looking at $600-700 a month generated from that $50,000 initial investment. If we look down here at the summary, cumulative dividend payments over the 2 years, 4 months, you've received almost $16,000 in dividends. Your share price growth In 2 years, not only are you getting these strong dividends, you've increased your share price by almost 25%. You've gained 327 shares, bringing your total to that 1422. The value gained is just over $30,000. And your total growth, when you add your dividend and the share price, you've grown 62%. That's a great return on investment. This is a wonderful income-driven strategy for a lot of people. Adding JEPIQ to your portfolio could be a beneficial way to build for down the road income that you can turn on. And don't forget, these are not qualified dividends, so they're not going to have the dividend tax rate of a qualified dividend that you'd get in a lot of other funds, but it's still a great way to generate income off a smaller amount of revenue. If you have a smaller portfolio and you need to increase the ability to generate more income, JEPIQ is a great way to do that. What do you think? What are your thoughts on JEPIQ? Are you invested in JEPIQ? If so, how have you done with it? Are you using the drip, or are you using the income as part of your life expenses? Are you retired or building toward retirement? Let me know in the comments. Leave a like if this has been helpful, and subscribe to the channel if you get a chance. It helps us to grow and provide more videos. And that's it for today. We'll see you next time on Simply Money.